let's go and talk about property. And the New South Wales Government revealed plans to phase out stamp duty to save house hunters thousands in upfront costs. The new proposal would give buyers a choice to pay up front or take an annual property charge. To give his thoughts is Anthony Landahl from Equilibria Finance, who joins me in the studio. Anthony, welcome back to Ausbiz.
Thank you.
So this proposal from the New South Wales Government in the budget release this week has certainly caught a lot of people by surprise. Pleasantly surprised with most of the feedback I've seen so far. What's your view on potentially giving a choice between stamp duty or annual land tax?
Yeah, look, there's been a lot of talk for a lot of years about needing reform to stamp duty. From a revenue perspective, the government gets $7 to $8 billion, so it's a key revenue line for them. Stamp duty is a big prohibitor for first home buyers trying to get into the market. But I think in terms of whether people look at paying stamp duty up front or look at a property tax and the potential cost of that over time might depend on whether they're an owner, occupier and investor and the time frame that they're working within. To give some perspective, currently if you buy a property for $1 million, your stamp duty is around 40 grand. If you look at the new proposed property tax for an owner occupier, it's going to be $500 plus 0.3% of the unimproved value. That might come to about $2,100 per annum. So if you're looking at a long-term family home, there may be an argument to pay the stamp duty up front if you've got the cash flow. But if you're a new home buyer trying to get in the market, that's really going to help those new home buyers.
But it offers flexibility. That's probably one of the key aspects there.
It does offer flexibility, and bear in mind, first home buyers aren't paying stamp duty in New South Wales at the moment up to about $800,000.
Absolutely. Anthony, let's get your views on the broader market. So the proposed changes will go and obviously help to go and increase turnover levels. Yeah. I think the one thing that a lot of people are surprised about this year is just how strong housing market conditions are. No longer are we talking about the doomsday scenario of big falls and everything else. People are talking about a housing boom. Yeah. Whereabouts do we sit in the realms of probability in your sense of that?
Yeah, look, if we go back to where we were 6 or 8 or 9 months ago, people were talking about a 10 or 14% drop in New South Wales and Victoria. We just haven't seen that. We've probably come about 3 or 4% off the peak. And to be honest, there was probably going to be a bit of a cooling in the market anyway, but housing is on a strong run and owner-occupier particularly are finding opportunities. What we're also starting to see is investors starting to come back into the market. They've been sitting on their hands. They've been thinking that the market's going to drop, but it's been incredibly resilient. We're getting auction clearance rates back up around 70, 80%. Now, they held for a little while because people were withdrawing properties from auction, but properties are going to auction now. That's actually becoming a bit more preferable because of the demand that we're seeing in the marketplace.
Speaking of that very demand, you're a very good man to go and ask when it comes to finance. I know, picking up, one thing that a lot of people are asking about still though is ease of access to go and get finance. Yeah. We know that for a long period of time there, it was taking an eternity to go get loans through. What are you seeing on the ground now when it comes to approval times?
A critical issue, and it's still problematical, is the truth. The Morrison government have announced these changes to responsible lending. That's in consultation process at the moment. The view on that is that they'll come out in March next year, and that's going to ease access to credit. That's changing the responsibility from verification of the lender to essentially building that trust with the borrower around their repayment. So we've got long lead times for simple refinances and for home buyers. A lot of providers are just doing electronic pre-approvals now. They're not actually doing fully assessed pre-approvals. But you're seeing lead times from some providers 2 or 3 days, some providers 3 or 4 weeks before they're picking up a file.
Wow.
And if you're wanting to get in the market, a lot of it's about interest rate, but a lot of it also is about finding the right solution based on your timing, based on the sort of pre-approval you're after, as well as some of the lead times we're seeing. So access to credit is still in truth posing a problem, and I think all of us, including the lenders, are looking forward to seeing what the Morrison government comes out with next year.
Absolutely. Just to go and finish off, Homebuilder, we're seeing that starting to go flow through when it comes to new home sales, building approvals and the like. Finance for new home sales, I gather, is also starting to go and pick up pretty strongly.
Yeah, it is. They released the second round of the Homebuilder with some changes, as you've intimated out there. Still very strong demand for that. The providers have released their places and some of them have already got waiting lists. We are seeing a lot of new home buyers. Part of the issue with that has been how the government's actually implemented, where some of that funding is not actually being able to use for the client as part of their funds to complete. So they might be going to the bank of mum and dad to get those funds until they are eligible under the criteria for the home builder based on when they start the building program. But it has been a pretty good initiative to help some younger people get into those land and construct projects.
The bank of mum and dad, one of the most reliable lenders out there. Anthony Landahl from Equilibria Finance. Fantastic to get your views. Enjoy the
Great,
rest of your
thanks
day.
mate, cheers.